Hi traders, welcome to the new weekly Forex forecast for the trading week beginning on 1st of July. It's not only the beginning of a new trading week, but also the beginning of third quarter of 2024. Now, in the current week, we had PCE report released from the US, and the numbers were slightly lower than the previous report. But despite of that, the US Federal Reserve, they are maintaining their hawkish view. Now, this hawkish view is giving strength to US dollar. Now, in the coming week, we have French elections followed by UK elections and non-farm payrolls to be announced on Friday. So let's dive deeper into the charts and find the tradable opportunities in the coming week. So let's begin our chart analysis, and as usual we are going to begin with dollar index to understand the direction of dollar. Now I'll quickly start from weekly here. Now based on the weekly frame, so what I've done here, I've already marked a rising channel which is coming from the long-term rising points. So here, based on the rising channel, give me a second. So here, right, so this is the lowest point. This is the lowest point, followed by next higher low, and then we have new higher lows, higher low, higher low, and higher low. So it's been continuously making higher lows in conjunction with higher highs, which gives technically a bullish view to dollar index. Now apart from the higher lows and higher highs, we also have the confluence of bullish divergence. Now I've applied Fibonacci retracement starting from the lowest point of the weekly chart and connecting to the highest point. Now based on this Fib retracement, we have found that dollar index, it retraced exactly to the levels in between 50% and 61.8, and it formed bullish divergence, also giving higher highs after the breakout. So bullish divergence, bears breakout done, buyers, they have completed the bears retracement done, and now this is the continuation. So I'm going to apply Fib extension from this level. So let me just clean a few of my existing labels or drawings here. So yeah, so here we go. Now I'm going to apply Fibonacci extension. I'll start from the turning point. This is the divergence point. I'm connecting to the first high and higher low. Now if you notice, Fib extension 61.8 is already achieved. Current price level is exactly on 61.8, in fact slightly higher than 61.8. The next extension level is here, 100%, and the level is 107.99, or we can say 108. We also have confluence of higher time frame Fib levels here in between, so it's a very strong resistance area, and dollar is showing resilience. Fundamentally, dollar remains bullish on the based on the hawkish comments. Now let's move on to the lower time frame. Now moving to daily, I can see that it's forming low, higher low, higher low, and again higher low. So we have a rising trend line here starting from the lowest point. So this is your daily rising trend line. Apart from that, this is also your bullish divergence on the daily. Turning point comes with bullish divergence. It has higher highs, and higher highs. Now it needs to break the previous high, complete its Fib extension 100%, and reach to the target level of 108. Now on the basis of MACD histogram, I can see on daily basis, MACD histogram is showing some signs of exhaustion here. No divergence coming up, but signs of exhaustion because the histogram has started shrinking here. Now coming to the next lower time frame, that is 4H. Now based on 4 hourly frame, I can see that we got bullish divergence here on 4H. So dollar index completed bullish divergence. It broke the BOS, and since then it's creating higher lows, higher lows, higher lows, higher low, and higher high, higher high, and higher high. But it is also forming bearish divergence here. So signs of weakness. Apart from that, it's also a rising wedge pattern. So we got the massive breakout in the bullish direction, and since then it's forming a rising wedge here. Now rising wedge is a bearish pattern. So here currently dollar index is at a very crucial resistance level. Now we might see some short-term pullback, but keep in mind, until it breaks below 105.31 on daily basis, the technical setup is still bullish. So once it breaks below 105.31 on daily basis, it moves out of this rising wedge pattern. It should move downwards, and then it should be going further down for the correction, and ultimately I'm expecting one more push to the upside. So only in the short term I can see that dollar may remain under pressure due to bearish divergence forming on 4-hourly chart, major resistance level, but the higher time frame is still supporting the bullish point of view. Now let's move on to 1-hourly chart. Now on the basis of 1-hourly chart, I can see that it's now forming higher highs with bearish divergence coming on MACD histogram and MACD lines both, but it has not broken below the BOS level. So the sellers, in order to gain the control of dollar, they should create BOS and give a closing below this crucial support level at 105.31. So to cut it short, until it remains above 105.31, it's not bearish. I can see some signs of exhaustion in the buyers, but it doesn't mean that we should start selling dollar right away. We should wait for the lower low formation and lower high formation. Short term plan is bearish. The medium term plan is still bullish for dollar. Now let's move to Australian dollar versus US dollar. Now based on weekly chart for AUDUSD, what I've done here, so I'm just going to clean my existing lines here. Give me a second here. Okay, now this is the weekly chart for Australian dollar versus US dollar. Now on the basis of weekly chart, it's been continuously creating low, higher low, and the next higher low. Now if I zoom in and try to connect with the help of fib measurement tools, so here we got bullish divergence on the histogram, breakout structure happened, we got the rise, we got the drop, and now it's again completing the bullish structure. So I'm going to apply Fibonacci retracement starting from this low, connecting to the highest point, and we got the retracement precisely towards 80% area, and then continuation upwards. Now let's move down to daily chart. Okay, now on the basis of daily frame, I can see that we got bullish divergence here, we got the breakout structure, higher high formed, and since then it's consolidating. So Australian dollar versus US dollar is now consolidating in this sideways structure, and on the basis of MACD, we can see that MACD is now completing the bullish cross, the momentum is picking up, and the environment is getting bullish here. Now because short-term plan for US dollar is bearish, so it definitely makes sense in the short term, like if dollar goes down, then Australian dollar versus US dollar should get bullish. On the other hand, fundamentally we had series of announcements from the Australian Central Bank, Reserve Bank of Australia, that they're still maintaining their hawkish view, and they might consider hiking the interest rates to control inflation. So all these fundamental factors, they are quite bullish for Australian dollar. Now here I'm going to apply fib extension. So I'll be connecting the lowest point of the daily chart. So I'll start applying fib extension from the lowest point of the daily chart. I'll take it to the highest point, and I'm going to connect with the higher low. Now on the basis of fib extension, the first target in sight is 61.8, followed by 100%, and finally 161. So these are the three probable targets for Australian dollar and US dollar, Australian dollar versus US dollar. Now let's move to 4H. Now on the basis of 4 hourly time frame, I can see the pattern is bullish. We have low followed by higher low. Then again we got some consolidation and we got another higher low in conjunction with bullish divergence here. So we have bullish divergence and a higher low pattern. Now the buyers, they should break above this high, the previous high. We got one break above this level, but it was a fake high. Now we need another high, we need one more breakout, retest, and it should be bought. So this is the plan. So I'm going to mark a rising trend line on the 4 hourly frame of AUD versus USD. Now until Australian dollar versus US dollar remains higher than this rising trend line, the plan is to buy on the dips. A break below this rising trend line will invalidate the bullish setup, and the targets I've already explained on the basis of Fib extension plotted on daily time frame. Now let's move down to lower time frame, that's 1H. Now on the basis of 1 hourly chart, I can see that it has already formed higher high. So we have higher high formation on 1 hourly chart, higher high formation on MACD histogram and even MACD lines. Now I'm going to apply Fib retracement on the current 1 hourly push in the bullish direction, and we might get a buying opportunity on the discounted levels, at the discounted levels between 61.8 to 80%. So any drop towards this level should be taken as an opportunity to get into a long trade. Now let's move to the next currency pair, that's Euro versus Franc. Now keep in mind, because of multiple fundamental factors coming from European area, French elections, UK elections, plus non-farm payrolls, I'm expecting high volatility in European pairs in the coming week. Now let's start from the weekly chart. Now on the basis of weekly chart, we got bullish divergence here, lower low formed with massive bullish divergence. Now the BOS on weekly is not yet done, so I'm going to mark the BOS level of the weekly chart. So this golden line is to be crossed to complete the BOS on weekly, and higher high formation is already there. So we got higher high formed on the weekly chart with higher high formed on histogram and even on MACD lines, which means the bullish pattern is in play, the bullish structure is building up, and any dip should be considered as an opportunity to buy. So here I'm going to now daily time frame. Now on the basis of daily chart, I'll start the analysis from the lowest point. So we got bullish divergence here, this becomes your lowest point, and we got bearish divergence on the top, so this becomes your highest point. So we have A at the bottom and we have point B here on the top. So I'm going to use A and B to plot Fibonacci retracement, and here we go with Fib retracement. Now we got a direct crash to 61.8. Now okay, we are always expecting a bullish rebound from the areas around 61.8, but this movement, the corrective movement from the highest point to 61.8, it should come in waves. So it should not be a one straight move like we are witnessing right now on the Euro Franc chart. So had it been multiple waves with bullish divergence, it would have given me comfort to get into a long-term buy trade at the current price. Now still we'll be buying here because it's a discounted price level, but with caution. So I'm going to apply a reverse Fibonacci retracement connecting from point B to the current low formed. Now I'm expecting that in the upcoming days, Euro Franc can move up to 61.8 of this bearish move, and then it might drop one more time to complete bullish divergence on the charts, and then I'll be comfortable in getting into long-term buy position. So at least we can expect short-term bullish moves up to 61.8. So I'm going to highlight, or I'm going to mark this area as our immediate target. Now let's move to 4-hourly chart. Now on the 4-hourly chart, if you notice, we have bullish divergence here at the bottom. So connecting with the price, we have divergence between these 2 points. So lower low formed with bullish divergence on MACD. So this is your massive resistance area. So this is the bearish point basically. So I would like to see buyers breaking above this bearish level in order to complete the bullish pattern. Now the current bullish structure, I can see that it might rise towards this 38.2 area, build some bearish divergence. I can see that it's already showing signs of exhaustion because divergence is building up. So we might see some short-term correction, then continuation towards this area. So moving down to 1-hourly chart, it's still not bearish on 4-hourly, but it's building bearish structure. Now here, let's move to 1-hourly chart. On the basis of 1-hourly chart, lower low with bullish divergence on histogram and MACD lines. The break of structure happened, and since then it's making higher lows, higher lows, higher lows, higher lows, and higher lows. I'm going to apply Fibonacci extension on this bullish pattern. So I'll start from the lowest point of 1-hourly chart. I'll connect to the first high and higher low. I'm going to change the color here. Give me a second. All right, so the green lines for Fib extension will show us the immediate target level. So 1.618 Fib extension area, that's the price level of 0.96488 or 0.9650. So this is the zone I'm targeting. So maybe on Monday or Tuesday, Euro franc may touch this zone with completing bearish divergence. Then I'm expecting short-term reversal. So we can apply Fib retracement starting from the lowest point of 1H, connecting to the expected high to be formed around 1.618. Then it's gonna complete its short-term retracement correction, and it's gonna move up, and it's gonna move up to the 61.8 of the downward trend which is formed on the higher time frame. So in short, I'm expecting to get into bullish trade after retracement from 161.8. So it will reach this zone on Monday or Tuesday. Then I'm expecting short-term pullback towards 61.8. So I'm going to apply long entry at 61.8 with the stop loss below current low and the target to be taken from the higher time frame. So here we go on daily chart, and this is the target which we have already taken from the higher time frame, 61.8. So in this way, we'll be getting the risk and reward of 2.3. So if you'll be entering into a bullish trade after the lower time frame pullback, expecting 61.8 of the higher time frame, so your risk and reward will be 2.3. So this is the plan for Euro franc to buy on the dip in the coming days. The next currency pair is New Zealand dollar versus Canadian dollar. Now let's move to weekly frame, and I'm gonna clean my existing drawings. So here, based on the weekly chart of New Zealand dollar versus Canadian dollar, we got bullish divergence on the weekly chart, and here is the bullish divergence I'm talking about. Now after this bullish divergence, this is the lowest point. We got higher low, and this is the recent most higher low which is formed. So this is the turning point which will be considered on daily chart. So let's move to daily frame now. Give me a second. So here I'm talking about the daily level. Plus I can see that it has already broken above the previous high. So higher high formed, latest turning point, higher high formed. So any dip should be taken as an opportunity to buy based on weekly frame. Let's move to daily now. Now here we go on daily frame. So on daily frame, we got first push up and first corrective pattern down. So we can apply A, B, C here. So I'm going to use A, B, and C to apply Fibonacci extension here. I'll start from the lowest point, connect to the first high and the higher low. Now, if you notice, currently price touched Fibonacci extension 2.618 and it's hovering at Fibonacci extension 1.618. Now, this should be your current support. If this support gets breached, then the next entry opportunity will be at Fib extension 100%. So based on the daily chart and weekly chart, let's move on to 4 hourly and see if we have tradable opportunities in the bullish direction or not. I can see that the sellers are looking quite exhausted here because of continuous divergence being formed on histogram. I can see first attempt by the buyers, it failed. Buyers, they come back to the same level and now they have not yet created a higher high. So based on 4 hourly chart, I'm going to zoom in here. If buyers, they hold this area, Fib extension 1.618, if they form a support at this point, that is 0.8331, I'm expecting the next target to be Fib extension 200 followed by the higher levels. So moving to 1 hourly chart, I want to see buyers holding support above this area. So if buyers are strong, see, we already got bullish divergence here. Now, on the basis of bullish divergence, we want to see break above the BS level. If this break does not come directly, then we might get first push up, correction down, and if this correction is up to 61.8, then that will form our point number C, and I'm going to apply Fib extension. So let's try to find out how deep our point C would be. So starting from the lowest point of 1H, connecting to the highest point. So assuming that the sellers, they move out from the market at Fibonacci retracement of 61.8 of the current bullish leg of 1H, our entry will be here at 61.8. So let's say we have entry at 61.8, connecting from low to high, moving back to 61.8. And let's change the color of the Fib extension to blue. Okay, now let's follow the extension levels. So here we got the duplication zone. So this is going to be my target. So let's see our risk and reward. Long position around 61.8, stop loss at 125, and the target at the duplication zone. So we are easily getting more than 3 times here, 3.2 times. So amazing buy setup forming up, provided buyers, they hold support at the current level. Otherwise, the next buying level I've already defined on the higher time frame, that would be at Fib extension 100% of the higher time frame. Now the next instrument I'm going to talk about is NASDAQ. Now I'll move to weekly here. Okay, now on the basis of the weekly chart for NASDAQ, I do not see any signs against the buyers right now. The price pattern is bullish here. We are continuously getting higher lows. So this is the turning point with divergence. Then we got higher low, higher low, higher low, higher low, and higher low, in conjunction with high, higher high, higher high, higher high, and next higher high. Do we have divergence? No, not yet. So weekly chart remains bullish. I'm going to apply Fib extension on the lowest point here of weekly, first high formed at the major higher low. Now if you notice, it has already crossed Fibonacci extension 500%. Now we got support, we got base at this level. That's it, and I'm moving to the lower time frame. Now based on the latest daily bullish leg, we got first push up, corrective push down. So I'm going to apply Fib extension here. So if you notice, we have higher high formation of MACD lines, and even histogram, they have formed higher high. So any pullback should be taken as temporary corrective pattern. It should be taken as opportunity to buy on the dips. So I'm going to apply one more fib extension on the latest daily leg. So I'll start from the daily low. I'll connect to the first high and the higher low. Let's change the color to green. Okay, so the green fib extension lines are on the latest daily leg. So currently it has reached an important fib resistance of 3.618 and 400%. That's it. And from this level we can expect short-term pullback towards 300% or maybe 2.618, and even the rising trend line is intact. So I'm going to apply a rising trend line here. I do not see any bearish divergence on daily chart of NASDAQ. Let's use rising trend line here. So until NASDAQ remains above this rising trend line of the daily time frame, the pattern is bullish. Now let's move to 4H. Now what's happening on 4-hourly chart? On 4-hourly chart, I can see that the buyers, they got exhausted. They developed higher high with histogram divergence here, and the sellers have completed the BOS. Now because sellers have completed BOS, I need to apply Fibonacci retracement from top to bottom. So I'm going to connect A and B with fib retracement in the bearish direction. So I'll start fib retracement from point A to point B. Now if I zoom in, you'll notice that after creating bearish divergence and the BOS completion, the buyers, they could not break above the retracement point of 70%, and there was a sharp decline. So if we consider this point as C, so we have A, B and C, and I'm going to apply fib extension in the downward direction here. Completing A, B and C, and let's turn it into red line since it's bearish. So here I can expect in the short term that sellers, they might push NASDAQ towards bearish extension of 618. So that's price level of 19,794 or 19,800, followed by 19,569, and this is also connecting with the rising trend line of the daily chart. So we can expect short-term bearish plan completing the retest of the rising trend line and then continuation higher, because higher time frames, they are still bullish. Now let's move to lower time frame, that's 1H, and the next lower time frame I can see that we got bearish divergence on MACD histogram between the last two highs, and the rising trend line is also broken. So once the trend line is broken, market goes back for the retest. So any pullback in the upper direction should be taken as an opportunity only in the short term to sell NASDAQ and collect target, your first target at 61.8. That's 19,800, followed by, if it continues in the bearish direction, then followed by fib extension 100% of the bearish wave. So short term bullish, but long term it's still, short term bearish, but long term it's still bullish. Now finally, let's analyze our favorite gold. Now based on weekly frame, I'm not going to repeat the same thing again and again. So here I've connected a rising channel connecting the higher lows, also connecting the higher highs. So currently gold has broken this rising channel and it's hovering at the upper boundary of the rising channel. Now usually when the correction takes place, the instrument goes back to the middle line of the rising channel. So there is a very high probability that if the bearish trend continues, like short-term correction, it picks up momentum. If the sellers, they pick momentum, then they might push gold to 2230. which is the confluence of multiple fib levels and also the center line of the rising channel. And then gold can resume its bullish direction and complete its next fib extension in the bullish direction. Now let's move to daily chart. Now on the basis of daily chart, I can see that after creating this massive bullish pole, it's a bullish flag connecting higher highs. I can see that there is bearish divergence, but the sellers, they have not yet completed the break of structure. So this level is not yet broken by the sellers. So I've also connected the higher lows here, higher low, higher low and higher low, and I've also joined the highs, higher lows and lower highs. So currently gold is consolidating. It's stuck in a triangular pattern. So I'm going to zoom in here. So if you notice, I've connected multiple lower highs and higher lows here. So currently gold is trading inside the triangular pattern. Now what I've done here, on the basis of the previous structure, I've connected the support and resistance with this with the help of golden horizontal lines. Now all these golden horizontal lines, they are important level of support and resistance formed on the daily price chart. Now I'm moving to the 4-hourly chart. So the objective is to capture the trades inside the triangular pattern. So here we have two falling trend lines and one rising trend line, and gold is stuck inside. I've marked these horizontal lines on the 4-hourly chart, which are taken as support and resistance. So currently we are at resistance, and I can see exhaustion building up on MACD histogram. So we can expect that if sellers, they continue, they will take the price back to 2,310. If 2,310 is broken, then the next level is 2298, followed by 2292. Now if we see a break below 2292, a convincing break below 2292, then on the retest of these horizontal levels, we should take short-term sell trade on the retest, successful retest. If we see a bullish breakout out of this consolidation pattern, then the buyers, they should give a closing above 2332 to 2337. In short, we can say 2340. They should break the rising trend line, come back for the retest, make 2335 as a massive support, and then we can expect continuation towards 2385 to 2391. So this is the short-term plan. So gold is currently stuck between the triangular pattern, between the triangular boundaries, and I'm just planning on the basis of horizontal levels the short-term trades. Now if you notice, we have bullish divergence here inside the triangular pattern, but we are currently at a resistance level. So I can expect some short-term pullback here, at least towards 2,310, and then continuation upwards towards the falling trend line. So if it forms support at 2310, you can get into a short-term buy trade. If it breaks below 2298, convincingly below the lower boundary of the triangle, then look for retest and get into short-term sell trade. For longer term, my view is still bullish. Gold remains bullish, and I'm expecting that gold should complete its technical target of 2570 in the coming weeks. So this is my trading plan for the coming week. I hope it adds value, and have a profitable and successful trading week ahead.